Welcome back from lunch. It's time to start the second half of day two of FTX'21. And I hope you've got a coffee because we're starting big. We're getting to the heart of the matter, the bone of the meat, the return statement of the function online payments. Now, every year it gets easier to make online payments. And yet the core problem of I don't have money is yet to be solved. Never has it been easier to transact online, and never has it been easier for distant relatives to ask me for money. Now, if payments are hassle free, then the hassle starts after you look at your bank statement later. Now, obviously, payments have already made enormous strides over the last few years, but the fintech industry is never satisfied with what they have, which is why we're all so unhappy. But jokes apart, the question here is how are businesses catching up with changing consumer payment behavior and their evolving expectations? Are businesses ready to provide customers with that more? Are they equipped with the right technology to automate their own money movement so that they can focus on scale and not compliance? That's a lot of words. That and much more we'll find out in our next session, which is titled What's Next in Payments? So please join me in welcoming on stage our panelists. Mohit Bedi, SVP and Business Head for Acquiring and Commercial Cards, Axis Bank. Raghu Ramanujam, the Director of Product for Flipkart. Gaurav Hinduja, the co-founder of Capital Float, and Khilan Haria, VP and Head of Payments Product at Razorpay. Over to you guys. Thank you so much. Looking forward to it.
Thanks, man. Hello, everyone. Very good afternoon. I hope all of you had a good lunch and are geared up to hear more from this esteemed set of panelists on the future of payments. Warm lot of welcome to Raghu, Mohit, and Gaurav. Thanks for taking time. We'll get started. Uh, So I think the first thing at Razorpay, we've been at the center of digital payments and uh, get to see a wide array of trends in terms of how users and consumers are transacting using digital payments. Over the last 4 or 5 years, uh, we've now seen a couple of 100 million users uh, using payments through different modes, mechanisms. More and more of India's population is coming online, getting more comfortable transacting online. So my first questions to Raghu. Uh, what are the trends you are observing, Raghu, at Flipkart around the last 50, 70 million users who come online, or the newest set of users who come online? And then what do you expect for the digital ecosystem to do for the next 100, 200 million that need to come online as we want to get more and more folks to participate in the ecosystem?
Hey, thanks for inviting me to the session. I've definitely looked at this annual series as a well anticipated and well received. Thanks for inviting me to start with. Let's talk about what the mission at Flipkart that we are looking at, right? It's essentially very crisply put, how do we digitize Bharat for e-commerce platforms and for not just digital transaction, but for e-commerce platform. I'll just layer in on the two words. One is digitize Bharat, and I say digitize Bharat and not necessarily digitize India, because India is to some extent getting digitized, yes, but penetrating to the tier 2, tier 3 vernacular new to online customers is a challenge, right? The second part is also making the shift between getting users to pay using QR code on a Kirana or an instant gratification platform to some platform like an e-commerce where the gratification is delayed, right? It's not like your mobile recharge or your utility bill payment where the friction is very high. How do we get that portion of users on to transacting on an e-commerce platform when you've not seen the product? The product is going to reach you in 2, 3, 4 days sometimes, right? And still you build the confidence to say, hey, this is a platform that we can trust on. So access is not a problem. Access to digital instruments is there. UPA has done a tremendous job on that. But areas like how do we build a trust on the e-commerce and the digital platform, and do that at scale to customers in tier 2, tier 3 vernacular. That is what it is. I mean, while scale is an important problem and regulations are part of it, We are still in the process of saying how do we bring the next 200 million customers onto digital on e-commerce platform. No.
Thanks, Raghu. I think you touched upon a very important aspect of trust potentially, right? In terms of how new users can trust can be established with businesses, with merchants, with various use cases. Uh, Stepping back a little bit, Mohit, want to kind of bring you on board. Your team, keeps scaling UPI. One of our partners on UPI and the rest of the ecosystem as well. Uh, and UPI continues to just break records, right? Not far
Correct.
away, few years you might see 100 billion transactions a month, right? Uh,
Correct.
what do you think fundamentally has led to UPI success, so that newer and newer users are generally comfortable, coming on to the digital payments ecosystem first time with UPI? What's really helping UPI grow?
So I think it's at the ground level, when the merchant sees the amount coming into his bank account instantly, is what is helping it. So it's the entire railroads that have been laid down by the NPCI team, and then there is a collaboration that is happening between the fintech players, the banks, etc. It is the railroads have developed so much trust in the whole process. I mean, just see simple things like success rates, then innovations happening around Soundbox, then the amount coming into the account instantly, people preferring that over cash, etc. I think the seamless railroads and the trust factor in of all the players in the ecosystem has led to the tremendous growth. I mean, people ask for UPI or QR codes, etc. now over anything, and for sure it is eating into debit card share. But that's the reality, right?
And more so net banking, or net banking and debit, both you're seeing being cannibalized partially?
See, every kind of spends is getting cannibalized. Even credit card transactor base is getting cannibalized. So it is the quantum of impact that is happening is on the net banking and debit side is probably higher. But yes, UPI is here to stay. Instant settlement is here to stay for merchants, and that is a reality we need to face and try and innovate around it and bring the whole ecosystem together.
Got it. Got it. Thanks, Mohit. Gaurav, bringing you on board. I mean, you deal with one of the more modern payment instruments in BNPL, and with all the global happenings in BNPL, that's the buzzword right now. What do you expect in terms of consumer trends? Are you expecting net new users to come on board via BNPL? Is it a convenience problem that's being solved? Uh, what is the fundamental problem that you are seeing BNPL solving for end consumers?
Yeah, for the first time, we're actually seeing a credit product morphed into a payments product, right? So whether it's on Razorpay, Amazon, Make My Trip, wherever it is, today customers can actually pay for anything on installments if it's a 500 rupee electricity bill or a 50,000 rupee phone that they want to buy, right? So I think BNPL has brought this fusion of credit and payments in a very interesting, seamless way. And unlike previous credit instruments, I think it does solve the problem of convenience for those who do have a credit card or do have credit facilities, because it's still one click checkout. You still have kind of two-factor authentication, all of that stuff on credit cards. But buy now pay later solves all of that. But more importantly, the way we see it, at least, buy now pay later actually is solving more of an access problem, right? Because at least 60% of our customers that we see don't have a credit card today. 30% of them are kind of new to credit, right? So it has always been difficult for credit card issuers to give new to credit people a credit card of 30, 40, 50,000 rupees, right? But in buy now pay later, I'm able to give them a very small line of 2,000 rupees or 5,000 rupees. And two, I'm able to make it contextual. So while a person is checking out at an e-commerce site, they require 2,000 rupees, they get a convenient product right there and then. So in many ways, it is a fusion of kind of a convenience payment, but also a starter credit product that can kind of massively grow. And obviously, with kind of UPI rails going forward, the friction in this product is almost kind of non-existent today. And so we are continuously adding about 500,000 new customers every month. And I actually see that doubling in the next 3 to 4 months.
Thanks, Gaurav. I'm going to go back to Raghu. Raghu, you spoke a little bit about trust, but what is maybe one other thing beyond trust that you expect to be solved by businesses such as yourself to onboard the next 50, 100 million end users?
See, I'll still go back to the point that Gaurav made. Access to credit, I mean, access to digital is there, right? Access to credit is, I mean, we're just scratching the surface. 35 million active credit card users on a 1.4 million consumer base, guys. Just look at that. It's a rounding off error almost, right? And I mean, we definitely need newer and more innovative underwriting methods. And then that will just become a flywheel, right? I mean, you start with that. I mean, initially you're going to have delinquencies, you're going to have NPA, but over a period of time, when you understand the customers better and understand profiling of the customer and what works and what doesn't work, this is a no-brainer, right? 35 million on 1.4 billion makes it a complete no-brainer in terms of access to credit. And as Gaurav also mentioned, it's not 30,000, 40,000, 50,000 access that they want. It's 2,000 rupees, it's 4,000 rupees to pay for a purchase that they're doing, right? Be it EMI or BNPL. That's also an interesting point that Gaurav made, which was 60-70% of these BNPL customers are not looking for convenience as a top, though convenience and ease of friction is going to help that. But access to credit, that is, we are just getting about started with thing. But probably the way to think about it is the initial framework and the digitization has to happen. Getting them onto digital first has to happen. Then you build understanding, you build data, you build history, you build insights, and then credit is going to follow, right? And that's probably what is going to happen in the next 4 or 5 years, and I can definitely see the ecosystem working towards that.
I mean, a contrarian view, Raghu and Gaurav, that I often hear from the other partners you work with, right? That while there are 35-40 million credit cards, but on most of the platforms in India's digital GDP, it's the 5-10 million that contribute to 80% transactions, right? How real is that, right? Is there such a high concentration base that the true need to evolve and add more users is slow right now? Hence, you don't see CC base scaling up.
Can you rephrase the question, please, Khilan?
So what I hear when I speak to other partners that we work with, right, is that on most of the platforms and in general digital GDP of India, it's only the first 5-10 million that matter. They are the ones that form 80-85% of the transaction volume any which ways. So my question is, are the folks beyond 35 million even relevant from the immediate next 24 months in terms of volume?
It's a chicken and egg, right, Khilan? They are not able to contribute to that GDP or GMV growth because they don't have the instruments, right? Now they're getting the digital instruments of payments, and first the 5-10 million have credit cards. Each of them probably have 3 credit cards, right? So yes, it's going to be like that for the next year or two. That 80-20 skew is always going to be there. But if you don't solve for that 80% of the population, or at least half of that 80%, right? The GDP of India is not really going to go anywhere. The GMV of a lot of the e-commerce players may still grow, but India GDP is not going to grow.
Interesting. Raghu, what's your take? Any different views?
No, absolutely. I mean, I'm not going to say the top 5% is good enough for me. Flipkart wants the top 95% on our platform, and transacting heavily and transacting with access to credit. Convenience is a problem, and friction is something we'll remove. But access to credit is something for the next 60% we need, absolutely.
Got it. No, thanks, Raghu. I'm going to bring Mohit back, right, and talk a little bit about friction. So, Mohit, I think you are at the forefront of a lot of changing regulations that happen, and have a lot more say than the rest of us in that, and access to it. The last 18-24 months, and in general, India over the last decade, right, has been a rapidly evolving payments regulatory framework, right?
Yeah.
And a lot of that is what we are discussing today, UPI, helping in experience and scale and growth and all, right? But at the same time, you see things like, the very recent one around auto debit, card SI, etc. Let's first talk card SI, right? I don't know how many of us, I heard from so many of my friends saying that, electricity cut gaya, kyun pata hi nahi tha ki auto debit nahi hoga, right? Sorry for moving into Hindi, but I mean, a lot of consumers, and maybe this is just the first, 1 million consumers of the country that are today, heavily into the recurring economy. But it did cause a lot of pain. So what are your views? And then, I don't know, Gaurav, Raghu, if you have thoughts on it from what you observe on the platform for card recurring, would love to hear the thoughts on the regulation.
No. So at our end, see, we are processing close to 20-25% of the online spends in India, and out of that, 35% spends that we see are basically on card on file transactions. and of that 65% are guest checkout transactions, right? Which means you need to store the card data. So these are huge numbers from our, and there were 2 3 guidelines, right? There was tokenization guidelines, there were standing instruction guidelines. So there were 2 3 guidelines that came into picture. I mean, the critically what was happening was you could store the card, and you cannot do standing instructions anymore, and which means you need to move towards tokenization. And government obviously relaxed the norms around tokenization and moved away from just mobile to desktop, etc., and everything. But I mean, the ecosystem still needs to evolve. There are 3 players in the market, right? There is issuing, acquiring, and networks. All of us are getting a hang of it, and right now aggregators are just getting ready. And then there is the end merchant. I mean, the likes of Netflix and Flipkarts, etc., might get ready at certain point of time, while aggregators are getting ready. But just imagine the long tail of small merchants, etc., who are still there. And this is when I'm talking about new transactions happening. There is a whole repository of data that they had created over a period of time. Right now, that is also at risk. So there are various things at risk. We all know this guideline will see. The only good part is that standing instruction is not that big a spend in the entire ecosystem in terms of total credit card or debit card spends. The timing is right. Probably how fast or slow it could have happened is the jury is out there, and that's the thing we are trying to speak to the regulator. And because it's a significant customer impact, I'm just hoping RBI supports us in the initiative.
And
So
Mohit,
it's a yeah,
when
yeah,
you say, sorry, when you say timing is right, right? Let's talk at SI right now.
yeah.
What do you think is the spirit behind this, and why do you think timing is right to create this disruption today?
See, the thing is that we know everybody wants to move. There are new startups that are coming up. Standing instruction is going to become a norm. There is a new UPI guide.
I think we just lost Mohit. Hey, sorry, we just got you back.
Yeah, yeah. So there are various players who want to get into SI. I mean, various merchants or online players. I think why the timing is right is because the share of spends of SI right now is probably at a smaller stage. Why the timing is right, that in case they want to implement it, right now is the time, so that when the scale happens, everybody is ready for it. And I think SI is going to be the future, right? In that sense, the timing is right. Probably how fast they had to do it is what they could have taken a call.
Got it.
So that's my sense in this.
And when when you say it's going to help in the future, you think the ecosystem was seeing a lot of frauds with the minimal adoption
Yeah,
right
yeah.
now, or chargeback disputes were low already?
No, so we know there were a lot of articles around data compromise,
Mhm.
right? The cards were there is we every second day we get a news article that the
Mhm.
card is there on the dark net. There is this database that has got released, and for the regulator also it becomes difficult as to who and which merchant, because merchants are technically not in control of the regulator, right?
Mhm.
So it was becoming difficult in the sense that where was this data going, how was it going, etc. And I think tokenization will ease out all these issues.
Got
uh,
it.
eh, Infrastructure wise, see, there was one inflection point that came in when we moved away from max type cards to pin cards, right? We were all very, why do we need to enter the 4-digit pin on the POS terminal, correct?
Yeah.
So tokenization sooner or later will become a norm, and it'll in the long run help protect your data, right?
Got it. Got it. Thanks, Mohit. Raghu, I'm going to bring you on board again. I know SI may not have really caused that much of a ruckus to Flipkart, but I assume tokenization might create more disruption. So in
See,
general, as a business owner or your business product teams, how are you managing the uncertainty around these regulations?
See, here is how I look at tokenization and at a Uber level, the regulations itself, right? I mean, at some level, if I take a very quarterly view to it, it could be viewed as a disruption, right? But it's also important to take an Uber view and distance yourself and look at the overall fintech ecosystem and see what it is doing to the ecosystem, right? Given in the industry would absolutely want the whole process to go at 250 kilometers an hour, right? But there are guardrails that are needed, right? I mean, you need to ensure that the customer trust and customer safety is not compromised at any point of time, right? These are steps which are necessary, and I will deliberately not use the word evil, right? But these are necessary steps to be taken. This may slow you down in the long run at a quarterly basis or a half-yearly basis. But if you are to bring the next 200 million customers onto digital and get them to transact, these are the guardrails that are going to be needed, right? You cannot scale it until you've put in place strong safety guardrails, trust guardrails, which protect customer interest and ensure that the customer can transact. And then if you take a 3-year view to it, I'm sure tokenization is something that we'll be very, very grateful towards, right? We will go through all the pains during the implementation and the process itself. But if we take a 3-year view, which is what we should, we'll all be grateful that this came in the way we did. It will also evolve. I mean, the regulators and the industry will work together, iron out glitches, work through experience challenges, and so on. We'll all learn, right? But this is what I call setting the course up for future, you know.
Yeah, and I can see how Flipkart and other larger merchants are also helping the ecosystem and the regulator, in the nitty-gritties and next level stuff, as we've seen working closely with you, Raghu, on tokenization. So I think kudos for Flipkart and some of the others to see the long-term value of this, and then be ready to take the bite the short-term bullet for it. That's kind of great to hear. Gaurav, I know your business hasn't been impacted on recollections too much by these two regulations, but any regulation you are worried about, right? That you think might impact the BNPL industry that scares you over the next year or so?
I'll come to the regulation, but actually not having the debit card or credit card SI has actually been a blessing to us, right? Because it's created a friction in a card process that is now making people shift to a cardless BNPL. So I'm not going to empathize with everybody else, but it's actually been a great blessing for us. And the more friction there is in a card instrument, it's great for a product like us. But on just your point on regulation, right? I think there's been a lot of regulation over the last year with the Chinese lending apps, with a lot of the lending companies that don't really use KYC. So there is this whole notion in the market that BNPL is not a loan, and we have a lot of players who actually kind of circumvent laws set out by the RBI and give BNPL loans without any due KYC. That is very quickly changing. There are new guidelines come out by the RBI which should go into effect in the next few weeks, where every single loan, whether it's a rupee, whether you call it buy now pay later, whether you call it a personal loan, anything you may call it, is going to have KYC mandated. And I think that's a good blessing, right? Because folks like us and many of our peers who have taken the trouble of following regulations, of being NBFCs, have to kind of not just create a level playing field, but also kind of hold ourselves to a higher standard and make sure that those who don't follow regulations, either they kind of come up the regulation curve, or they don't do business in India.
Got it. So I'm hearing this as this has been a good growth hack for you, and
Yes.
as maybe the 500,000 has gone higher over the last 6 months cause of some of this disruption.
Definitely.
Mohit, since you are in the closer circles, right? So what next should we expect and be readying ourselves as businesses are listening to us today, right? So post tokenization, SI, and some of these guidelines, what are the next couple of disruptions that you expect?
So in terms of regulation,
Yeah.
More.
yeah, regulation. So I think we've had enough in a sense. Ki actually we've started looking at regulation. I mean, they've so many that have come into place that we now look at regulations more as business opportunities now. So whenever a guideline comes, I start sitting with my team ki isme business opportunity dhoond lo. Like for example, I think when tokenization came, we were talking to your team only for the vault piece. So right now, actually, let's close these existing regulations because we have plethora of them. There are something on POS side also, on PCI DSS and all that have come up. So I think इस साल के लिए इतना कोटा काफी है. अगर अब मैं बैठूंगा तो product guys will start asking me कि regulations can't define the P&L now. So
on that theme, Mohit, that you are seeing this theme over the last 3-4 years, and in general over the last decade, right? From the time 2FA was introduced, more than a decade back, all of that is around the principles of consumer safety and trust, right?
Absolutely.
Are you seeing any modes of instrument, any flows, etc., where you think that is still at risk, and hence you might see the next regulation there, if not this year, next year, or the year after? So where do you
No,
still see potential loopholes where we might see more regulation around safety and trust?
No, I think on the payment side, at least credit, debit card, and UPI, etc. I think whatever was at risk is now taken care of, because this was the data, and there were a lot of reports, right, where a lot of new fintech players had come into press, etc., with data getting leaked over a period of time. But this was I think, the last thing they could have done in terms of protecting customer interest. I think the next thing obviously is happening around digital lending and the apps that are coming around it. There is a lot of talks around how do you protect customer interest over there, because the amount of collections or delinquencies that are expected, or even from that matter, customer disclosures that are expected. That's the only place that I see personally. There is some amount of ambiguity, but on the payment side, I don't think there is anything there.
Got it. Raghu, as a business owner or as a large e-com platform, any instruments, any flows where you see more consumer fraud or more of chargeback or fulfillment challenges, etc., linked to the payment instrument, where you think there might be a potential, even if it's the smallest of the pie today, right? But any methods where you think there is still a scope of enhancing safety and trust from a regulator perspective?
See, I'm definitely hoping that the this slew of regulations on the card that remains also the instrument of high transactions, right? So which also is why it starts to attract a higher percentage of risk in that, right? With these in place, and we don't have a great deal of those on the UPI and those rails, right? So it's still, a credit card is the area that requires a little more intervention, and I see that is happening in form of tokenization and multiple other things. I would rather echo what Mohit said, which is, with these we are fairly well set, at least so we believe. And Mohit said we are done. We have had enough for the year, and I hope he is not referring to 2021, which has a grand 21 days left. And the 1st of January, if more are coming, I think we'll have to rethink that. But I think we are placed well on the instrument of which attracts the most level of risk, which is credit card. If that goes well, and if it's sufficiently de-risks it, then that sets the ball rolling for the next steps.
Correct. Thanks, Raghu. Bringing Gaurav back, changing topics and moving to BNPL, flavor of the season, Gaurav. One of the common, things that we hear from businesses is this convenience or is this credit? So, what does it truly solve for?
See, it ultimately it is solving for credit, right? Let's be simple. There are, again, we are not going after the people who have a credit card. Using a credit card is still, let's face it, a very convenient experience. Yes, you have to enter an OTP and stuff like that, but like it's not a difficult experience, right? So ultimately, BNPL is solving for credit, but giving it in a very seamless, frictionless kind of manner, right? Because just because a person does not have a credit card or is new to credit, they still want their dignity. They don't want to jump through hoops. They don't want to fill out like 10 forms to get a small loan of 5,000-10,000 rupees, right? So BNPL is very much a credit instrument and will always remain that, and morphed into a payments like experience, right? And that's, I think, the unique aspect of this. It's the flavor of the season, like you rightly said. But honestly, players like Bajaj have been doing this for 20 years in the offline world. It's old wine, new bottle. But I think doing it in the online world, where you're able to give a loan and approve a person in under 3 to 5 seconds, that's really the interesting part that folks like us have been able to kind of solve and say, hey, okay, you're a young person, you can get 5,000 rupees, use this, and then I will upgrade you to 10, 20, 30, 50,000 in the next 6 to 12 months.
Got it. Thanks. Raghu, I think Flipkart Pay Later seems to be scaling up, and your team's putting a lot of might behind it. So, your thoughts?
I'll just also add one more point to the question you directed to Gaurav, which is it credit or is it convenience, right? We also make a very fine distinction between a customer who's coming to Flipkart, buying something and chooses a BNPL, and somebody who gained access to credit from a Zest or something and then comes to Flipkart from there and transacts it using the credit they acquired, right? That is the fine line of distinction I'll make for, which is a more primary need of the customer, right? For a customer who has come to Flipkart and chosen an option of BNPL, it's a little bit more indexes on the convenience aspect of it. But for a customer who comes in from a Zest, which is their destination for credit or access to credit, that is the fine line of distinction we make.
Interesting thoughts. And when you say there's a fine line of distinction, but I assume Flipkart Pay Later is still trying to solve for both in some sense, right? What's the primary index though that you measure for Pay Later to succeed internally?
See, access is definitely. I mean, access is definitely something that we would want to look for. Affordability, as we call it, is how we are. Affordability is the charter that tries to solve that very specific problem of saying, hey, how do I make this customer who has second thoughts about ability to buy be able to afford that and afford that today and not afford it after 3 months, after whatever it is. So that's how we look at it.
Understood. And to both Gaurav and Raghu, right? Globally, the instruments that have succeeded, or the markets where we see, all the buzzword happening in the last year or so, right? Were heavily credit card penetrated. So it definitely looked like there was access to credit, and the other things must have worked in their favor, right? Whereas in India, as both of you mentioned, 35, 40 million credit card users. So it's not that currently consumers have access to credit, and hence, if folks are trying to solve access to credit, is it going to be 10x 100x harder than what we've seen in the Western markets, where access is already there and it's now trying to enable or package in a different form?
See, it is going to be slightly harder, and I'll tell you the reason why. Because typically data here to underwrite folks who've not been part of the credit environment is still very thin, right? And they are called thin file by the bureau themselves, right? So I think it is a little harder in that sense, which is why at least folks like us take a low and grow approach, right? Get them into the credit net, watch them for a few months, kind of grow and give them higher lines. So by definition, that's typically a little longer tenure, will take 6, 12, 18 months to kind of really get to the level of GMV that we are starting to see in some of the European countries, at least at a customer level, right? And I think to your point, a lot of these US countries and European countries are they do have credit cards. But I think, interestingly, for large purchases, interest-free options really didn't exist. If you're buying a Peloton bike, which is the growth that, Affirm has seen, for example, I don't think necessarily the credit cards gave 6-month, 9-month options there at interest-free for the customer, right? So this made it a very easy kind of decision to make. Even though I have a credit card, why should I block my credit limit? Let me go buy a $2,000 cycle and kind of pay for it in installments, which is a small part of the use case we see in India. But I still firmly believe that 80 to 90% of the use cases for people looking to make purchases around 10,000 rupees and break that up into like 1,500 rupee installment for 6 months.
Interesting. Mohit, your team, I know you focus on acquiring, but Axis and all banks, traditionally it's the bread and butter to, issue cards and issue access to credit, right? What are your thoughts on these modern BNPL players as well as the challenger cards, right? There are some new age players that are solving credit through card as well, right? Likes of Slice and many, many others out there in India as well as globally. What are your thoughts overall? What do you think these folks are going to be able to do differently, better than you and the other banks who've been doing this for bread and butter for decades?
No, so we work very closely with FreeCharge. Basically, it's a Axis subsidiary, and Siddharth is a good friend. So I think they are scaling the BNPL product in similar manner as Gaurav was referring to. It's become a bread and butter product to lend out. From a bank perspective, or from our perspective at least, I look at it as that at least these guys are helping build the bureau and get good credit customers in the ecosystem. It is high time. I mean, we were all trying to fight in the same pie. I think fintech players, I've always been in a view that you need to collaborate with them. They're the one that are setting the platforms for millennials to come and get access to credit, build their good credit history, and then we can probably look at giving them good products as their career progresses. So for us also, FreeCharge has become a key forefront platform for doing BNPL.
Got it. No, that's pretty interesting insight. And then you're looking at some of these modern BNPL challenging players as growth hack for
Yeah,
your credit card business.
yeah.
Interesting take.
Obviously, see,
We
वो
won't let you just see the customers like that more. After doing all the hard work.
See, somebody has to build the foundation, right? So you guys are supporting building the foundation, and then over a period of time, everybody comes up the pyramid. But I mean, we all need to be very. We are all aware of the fact that this is a digital savvy customer, and they would, for them, service and convenience is paramount. I think that's what fintech is, and the new age digital players are solving for, and that's why they become the first choice of company to go to, right?
Got it. Got it. No, interesting points. Thanks. I'm sure Gaurav and team and the challenger banks are building a lot of consumer behavior hooks, which might make it tougher for them to transition back to card. Gaurav,
Yeah,
one specific point to you on that card bit, right? In terms of consumer behavior, how do you see the form factor of card versus the cardless form factor of BNPL that you work with, right? What do you think is the consumer behavior difference between the two?
See, a card is always an aspirational product, right? You like to have it, gives you some kind of status to have a card in your wallet, right? So I don't think that's going to go away anytime soon, and it's only going to grow. But there are kind of restrictions in terms of underwriting, etc., that you can't really give everybody a card. So at least the way we see kind of our product playing out is you get people in through the door of BNPL, see their performance, and then you kind of, for the select few, you give them a card or you give them a home loan, personal loan, whatever the person needs in their kind of life journey as they kind of graduate from one credit level to the next credit level. There is obviously this risk that Mohit spoke about, that as people get more credit worthy, they may graduate to a bank. But ultimately, like you said, the game is really UI versus cost, right? Who comes first and how do you really solve for that? And a bank is always going to be cheaper than somebody like us, but hopefully we can kind of maintain an edge when it comes to the user experience.
Got it. Got it. A changing topic and moving back to UPI. I know we spoke a lot about card and the modern ones, but UPI continues to be the growth engine for India's digitization journey. Uh, Raghu, I know your team is pioneering a lot of adoption that comes from NPCI and aggregators and banks and all. What do you foresee in UPI? I know there has been UPI 2.0, recurring bunch of other things that have come, and not many have seen traction yet. But what do you expect in the next wave? Maybe just codenaming UPI 3.0. Like, what are some problems in UPI that you want ecosystem and regulator to solve for the merchants?
I mean, you tried to steer the conversation slightly away from BNPL and credit, and I'll drag you back to that.
Okay.
Absolutely, absolutely. Credit on UPI is something that sounds very good to me, right? And start that young. I mean, you have a college student who's extremely credit worthy at some point of time, but the system, as we know it, doesn't see that, right? A college student is not going to default on a 4,000 rupee a credit line. Mask it as a card, mask it as a BNPL, mask it however you will, but please bring them into the credit system. I mean, let their credit rating start bubbling up. I mean, you see, this is the problem. One area where we have lagged, right? People don't see accessing credit as a way to build their credit score, right? In the US, people who are even very young would say, I mean, if I access credit and repay it on time, over a period of time, my credit, people are conscious about building their credit rating, right? Which is not the case in India, which is also been a cap which is posed on the system, which all results in your 35,000 active credit card users, right? Get this college and younger population into the thing, and I think somebody mentioned, I mean, they grow, right? Both in age and then financial independence, and those limits will start. We'll start seeing a hockey stick growth on that. UPI credit, start that young, and let's look at how we can shape that over the next 10 years.
Okay, interesting. Gaurav, I know a lot of your repayments are powered by UPI. What are one or two things you want wishlist from UPI?
I mean, I'm hoping and praying that the UPI auto collect actually starts to work well, and actually not just works well, but actually penetrates across all UPI apps, right? I think that is something that we are actually really keenly looking forward to. We've started initial experiments, and as usual, some kind of hiccups, but once that works, I think that's really going to be the key to unlocking credit in an even more seamless manner, right? Because ultimately giving credit, as we all know and has been said 100 times, is easy, but getting that is actually difficult, right? So this is really going to solve collections and repayments, and actually reduce fixed cost and reduce friction to the customer as well, right? Any customer doesn't want to have collection calls, they don't want to have collection visits, right? I think all this is really going to solve a bunch of that. So it's around the corner, or rather, it's already here. We just have to make sure it kind of scales up and actually does well.
Got it. Mohit, your take on UPI? This has been the engine of our growth. What should happen next year?
So before that, on the collections thing that Gaurav was mentioning, we along with Razorpay are building a product for collecting outstanding uh, on loans, etc. So maybe that will help. But coming across, what were you asking me? Can you repeat that question?
Sure, Mohit. I think I think like Raghu and Gaurav, you are also at the forefront of UPI innovation, and your
Yeah,
teams have seen crazy growth, right?
yeah, yeah.
What do you think is the next big thing that's needed in UPI to take this from a few billion a month now to 100 billion a month in terms of
No,
transactions?
no, I think there are no lot of more players that are expected in the ecosystem with new and I can't name them right now.
Hmm.
But right now the market is concentrated between 2 3 players.
Hmm.
But you'll see a lot of flurry of marquee players, marquee names coming into the ecosystem that will boost the whole thing to the next level. So I think that's what's going to happen next. You'll just wait and watch, and you'll see a exponential growth happening again.
Awesome. So flurry of TPAPs or UPI apps in the market. Thanks,
Yeah.
Mohit. That's super helpful.
Khilan, if I may add a word on that,
Yeah.
and I don't mean to represent our group company PhonePe here. I also wish UPI players would start making some money in this process.
Yeah, yeah, yeah.
Zero MDR is great for the customer. It keeps our cost low as an e-commerce platform. See, but all these industries need to be thought about long term, right? And you can't say the only way to scale this is UPI credit or something like that, right? UPI credit will happen, and hopefully it will generate bottom lines for the company. But UPI should find a way to help these players who have scaled it up and who have literally driven digitization over the last 5 to 6 years. Uh, there needs to be light at the end of the tunnel for them, right? In terms of how they make money on the UPI itself, right? That could be an interesting on UPI. I'm not talking about UPI on credit or anything like that. UPI transactions should start. I mean, there was a good reason to start with it as zero MDR. Helps scale, helps kickstart the whole process. But at some point of time, you need these players to also. I mean, you will not see innovation otherwise. You will just see stagnation and companies just putting it on a maintenance mode, which we don't want. We need active investment in it. We need active innovation to thrive in that space. So it will be good for these companies to start making some revenue on top of that.
Interesting thought. So you think the inflection point in the growth monetization journey has come, where now without the funnels being closed, you might not see further growth. Very contrarian but interesting thought. Thanks, Raghu. I'm going to check if Tanmaya can come on board and share some audience questions. Tanmaya, if you can hear me. Yeah, can you present or share maybe a few audience questions to begin with? Yeah, while Tanmaya, okay, I think we have the first one. How does BNPL make people socially, economically responsible? Is this the aspect that is being handled while making users eligible? Would love to hear from both Gaurav and Raghu.
Yeah, no, that's a good question. Yeah, I think what we do when we underwrite a customer, and even though we are able to give you an answer in a few seconds, we actually look at the income of the customer and what is the disposable income. And so the size of the line we give is always something in proportion of what we think is actually affordable by the customer. So the idea is never to overburden the customer or give them loans that they will end up in a debt trap. That's definitely not the case. The idea is to make it a convenient option that is obviously economically affordable to the customer. Like I said, grow as the customer's income as well grows. So I think it's definitely at the forefront of how we think about acquiring customers and how we kind of issue a line size on buy now pay later to the customer.
Interesting, but though counterintuitive, right? Because at the end of the day, the folks that do need credit are the ones that may not have that income pivot itself, right? So
Yeah,
at the
but
bottom end, you would end up rejecting a lot.
no, see, we are approving almost 70 to 80% of the customers that come away. It's a question of giving them smaller line sizes that we feel is in good relation to their income, right? So obviously, some people may not like the line sizes, but for most people, we feel it is the most economically responsible behavior that as a lender we need to do, right? Because for us, it's easy to kind of give higher line size and get higher GMV and growth in the next 6 months, but that's going to come back and not only bite the customer, but bite us as well with higher NPAs a year down the road.
Got it. Thanks, Gaurav. Raghu, your thoughts from a Flipkart pay later
Not
perspective?
specifically, but more a question to Gaurav than a point of view. Do customers actively see their rating or scores go up commensurate to their credit performance in Gaurav? How do you see it?
Yeah.
Do you have some level of transparency which says if I keep repaying, my rating goes from say 3.8 to 4.2, which gives me access to say 8,000 instead of 4,000? Is that sort of transparency built to the customer, or how do you broadly see it? I mean,
Yeah, so there are two things that happen, right? For example, if you are completely new to credit, as you take a BNPL line and pay it back successfully over 3 months, you actually start to see a credit score on the bureau as well that is pretty decent, right? So that's one thing. And then we have ways where we show the customer what their credit bureau score is. And so then they start to understand that, okay, with a better credit bureau score, they can start to apply and be eligible for credit products. The second thing is as we see a customer grow, like you said, we start them off at a small amount, but very quickly, graduate them and we communicate to them that, hey, in 3 months or in 6 months, you can go from, let's say, 5,000 to 15,000 if you kind of responsibly pay back all your loans. So there is that communication there. Can we make it better? 100%. I think we can make that a little better. But I think we've already seen that about 40% of our customers have gotten higher lines with successful repayments. But I think there's a job that we could do better in communicating that to the customer.
Thanks, Gaurav. Tanya, can you flash the second one? Yeah, I mean, interesting end consumer trends that all of us keep observing. But what's the thoughts? Maybe Mohit, you want to share any thoughts on like where do you see crypto, going in India? Any early thoughts, either as an insider or as an end consumer, either ways?
No. So my view is till the time it is regulated or there is some amount of backing around it, it doesn't make sense. I mean, I don't think it will become a significant player. It's not a currency that will take off till somebody is trying to regulate the whole environment. That's my short view around it.
Raghu, when can we buy crypto on Flipkart?
for now, we are just ordering a huge jar of or bucket of popcorn and watching that unfold. We'll see how that pans out. We are definitely keeping a very close watch on that. But for now, it is we are not getting on the stage. We are just sitting on our chair and just munching on the popcorn and figuring out how it plays. Broadly on the lines that Mohit talked about.
Raghu, it will be fun if you allow people to buy crypto using Flipkart Pay Later.
I mean, I'll pass that, but we'll say.
Yeah, no, Flipkart can afford slightly higher NPS. It's possible, definitely. Let's go back to the next serious question. Tanmay, if you can flash the next one. Okay, I'm going to pick an audience question around cash. The acceleration of non-cash transaction methods. While there is a focus on digital, what's the view on cash? It continues to be COD or cash methods for a lot of the businesses that they do support, even through the digital economy, is not coming down significantly. So, what's the thoughts from all of you?
I mean, we deal with cash on delivery a lot. I can tell you that. And our broad rule has been how do we bring the customer onto digital on the doorstep and then build that as a trust platform, trust over a period of time to bring them to non-cash on delivery at checkout. That's been the broad thing, right? But we also have initiatives that dig deeper into the tier 2, tier 3, tier 4 cities and bring newer users on the platform. So I don't think cash on delivery is going away anytime soon. I mean, Flipkart essentially invented cash on delivery. It has served us well. We do have a love-hate relationship with cash on delivery, right? It helps us bring in more customers on board, helps them transact for the first time, but over a period of time, we want them to graduate into other digital means. No, but cash on delivery is not going anywhere. Much I can tell you.
Got it. Interesting. No, एक is real, but Raghu, for other businesses who want to possibly bring it down, any tips?
I think it still has to be UPI. UPI after the delivery. See, here is the distinct difference between, and I alluded to it at the start of the conversation. It's very different for a customer to buy groceries in a retail or a kirana and pay using a QR. The transaction is done. They've got they've seen the box. They've filled their product that they bought, and they're comfortable to pay. But e-commerce is a very different experience where you've not even seen the product and you're hoping it comes in 3 days. So cash on delivery will definitely be there. Focus more on digital on doorstep after the delivery. That can be a great driver. Obviously, everybody knows Indians love discounts, right? But of course, UPI also has very little room for additional discounts to be offered. So UPI on doorstep and incentives could be the two strongest levers that can move customer behavior.
Got it. Thanks, Raghu. Let's flash the next one. This is an interesting one. Mohit, if you want to take it, would offline internet transactions be possible, or maybe they're already happening in a few areas? I think irrespective of India's 4G scale and 5G aspirations, it's still flaky and definitely in T4, T5, where I'm guessing Flipkart sees a lot of transactions.
See, the infrastructure needs to develop. But in terms of offline transaction, there is one use case that is happening is on the airlines, right? When they take off, you do the offline transaction and etc. But offline transaction is still some time away. They will never be a significant pie, if that is a better way of saying. So it's still evolving over a period of time. We are doing some tests and pilots, and we are doing it with the NPCI itself. So let's see how the tests evolve over a period of time, but they are still in very nascent stage.
Got it. Raghu, your wish list from an offline perspective, do you think UPI can work on offline?
We definitely haven't really put too much thought on that, really. No particular views on that. But definitely with the state of growth of data and mobile internet, we still haven't formed a comprehensive view on that.
No, but I'll tell you frankly, I was in Northeast. We were powering the Hornbill Festival, right? And we've given all 4G terminals there. Internet is not an issue. The telecom infrastructure is an issue, but internet etc. is not that big a issue. So I don't know how much use case is there of offline, and we will obviously get to see. Obviously, industries like airline etc. you can see use cases. But otherwise, more or less, Wi-Fi access and internet access is there now everywhere. Correct? I don't know what others think.
Yeah, it's there. It's flaky though. We do see a lot of drop-offs because of internet being flaky for T5, T6 customers. But I think it's definitely getting better, right? From where we were 5 years back. So maybe the hope is that the infrastructure continues to scale. Yeah.
In fact, in Northeast, at least in the far off areas, our terminals 90% of them are running on Wi-Fi instead of the telecom network for processing transactions.
Very interesting. Very interesting.
So cool. Is it more a matter of moving away from the dreaded OTP then?
So, you're right. That is, but with the limits going up to 5,000, that has changed a lot, right? And this is where we were discussing with Khilan also that there are new things like VSC etc. that are coming up, which also replicate the OTP-less transactions on the online world. That hasn't probably taken off to that extent, but that actually is a very seamless experience, right? So these things where RBI is actually upping the limit are something commendable they're doing, right? We always keep looking at it from the other side of coin.
Yeah, thanks, Mohit. Coming to the end of it, so I've got one fireside question for all three of you. A quick one, since we've only got 2.5 minutes remaining. What is one innovation that you expect in the digital payments ecosystem over the next 18 to 24 months? A quick one, top of mind thoughts from each of you.
Sure, I'll go for it.
Please.
I think Raghu mentioned this, but it's something that we are also pretty excited about is credit on UPI, right? And how do you really bundle that into along with the buy now pay later offering? I think that's something that we are working towards, and pretty excited to see how that rolls out in the coming months.
Okay, we're going to pass this to a friend at NPCI. Raghu.
I'll just do a plus one. I was just going to say exactly the same thing.
That's not allowed. No, you want to change.
That's why I went first, Raghu.
Okay, go to your second one. I'm sure you got a wish list of 10, 20 in your mind.
Let's remove OTP. Let's remove
Okay.
OTP completely.
OTP less, frictionless transactions. Great.
Yes.
Mohit, your next big innovation that you think will help scale the digital payment ecosystem?
So I think more or less something around tokenizations. I think because there are so many hops around it, I think everybody knows it's going to be a reality. And I think to improve that customer experience, there'll be a lot of innovations happening and etc. So let's see how that space evolves, because card save on file is big and standing instructions are going to be even bigger. So I think the next round of innovation with all these guardrails coming in will be the next big thing to watch out for.
Awesome. Thank you, Raghu, Gaurav, and Mohit. You've been an amazing panel today. Thank you for candidly sharing your thoughts and expert comments on what's next in payments. Khilan, back to you.
Thank you.
Thank you.
Thank you.
Thank you guys so much. That was our panel on what's next in payments. Chat is being very engaged. Thank you very much. Just remember that you can tweet on your social media about the event. Just tweet on your social media. No, you can share on your social media about the event using the hashtag FTX'21 and stand a chance to win amazing prizes. What? So amazing. I can't even tell you because I have forgotten. This panel was wonderful. I feel like the only thing that remains in this space actually is the BNDP model, which I am premiering. It's the buy now and don't pay. But let's hope by FTX'22 that we see some good movements in this area. Thank you guys again so much for your valuable time. Our next panel is about the new age of disruptors, and I will see you all in the next one. Thank you guys.